Hello, Sehaj, right? Sehaj, like the hedge. Welcome to the Gelato podcast.
Thanks so much for having me, Lewis.
Yeah, so I'm here today to discuss the project that you founded, Avantis, with you, and you guys have been killing it. You are, I would say, pretty much the #1 perp DEX on base, and you've garnered a lot of attention recently. I think one of the things that I immediately found out about you guys was that you guys had US equity perps, like Tesla perps, I think commodity perps as well. So yeah, today we will unpack, who you are, what the project is, and let's start by basically like why did you start Avantis, right? Let's cover that.
Yeah, definitely. So some background, I used to be at Pantera Capital as a VC for 2 years before I started Avantis. So I had my chance to survey the space and really see what works. And look, there's two main reasons why I started Avantis. One is I love DeFi. DeFi is what got me into crypto. So I didn't discover crypto because of like someone pitching me or shilling me the latest meme coin or something. I actually got into crypto because my friend said, you have US dollars, you can earn like 20% yield on it. This is back in the 2021 crazy yield farming days where 20% was like nothing. It was like nothing, right? So I got into DeFi, and that's where I found my love for crypto. And so when I became a builder, it was obvious to me that I wanted to build in DeFi. And then so the second question is why Perps? Because at that time, people were just beginning to use on-chain Perp DEXs, like GMX being one of them. And I really saw that two things were happening at the same time. I should say three things. One is that AMMs were really taking off with GMX taking the scene, and people are really believing that AMMs will be the future of on-chain perps. The second was that Coinbase was launching this L2 called Base at that time, which just got into testnet. And we were really bullish on the whole idea that there needs to be only one L2. The world doesn't need 25 L2s. One is good enough, as long as that L2 is backed by great distribution, great tech, and builders that show up. And the third thing was that real world assets were coming on chain, but mostly in the sense of spot and tokenized T-bills. So it was a bit boring to see that being the only sector that was on chain. And so we said, let's take all three together into Avantis, let's pack it up, and let's build a Perps DEX for real world assets using an AMM on base.
Cool. Wow. Nice. When did you guys launch on mainnet?
We launched on mainnet in Feb of 2024, so early 2024, but we were building since June of 2023.
Yeah, so I guess the listeners will be familiar with perp DEXs and the architecture, but I think you guys stand out because you focus on RWAs, right? And just very, very simply put for listeners, perp DEXs essentially are, perpetual futures exchanges that run on chain. You guys run on base, right? And normally for crypto perps, like crypto native perps, it works quite beautifully. You have an index price, like for example, let's say you have a BTC perp or an ETH perp, right? You like an ETH USD perp, you have an index price for the ETH USD exchange rate. And then you have this zero-sum market where people go long and short. There's winners and losers, basically, that cancel each other out, roughly speaking. And you trade that 24/7. And the crypto perps are sort of like a no-brainer. They are the simplest version of a perp, I guess, because crypto markets, like, they're also 24/7 natively, right? The ETH spot markets, the BTC spot markets, they trade 24/7, so you always have a good reference price, more or less, I guess. But yeah, like with RWAs, it's a bit different. Like, Tesla stocks, they don't trade 24/7. So that's usually
Yes.
one of the things that is immediately like, okay, how do builders solve that? So how did you approach perp DEXs? What made you go for RWAs specifically? And yeah, like what are the unique challenges that you are facing? Would you say you've already solved them, or is this like a sort of moving target?
Yeah, so it's definitely, I'll say to begin with, it's a moving target. I think every perp DEX is looking at RWAs as the $1 trillion opportunity, but then people are experimenting, right? Hyperliquid just launched HIP3 with Trade XYZ. I think you must have seen in the whole timeline, that's all that people are talking about. That's a 24/7 perp, but then very illiquid, very high spreads. very volatile funding rates. What Avantis is doing on the RWA side is something that already exists off-chain and is very battle-tested. And what that is a CFD. A CFD is called a contract for difference, where you enter an agreement with the broker to enter a trade, and we only settle the P&L of the trade. So you're trading against the Avantis LP pool at a reference price, which is very well used across the world, including CME and some of the top venues like Robinhood, CME, etc. And so you rest assured you'll get the best pricing, and we'll settle the trade based on market close timings and open timings in a very standard way. So we're following a very market standard approach because we don't want to risk innovating where innovation is not needed in a way. The downside of that, Luis, is that we don't offer 24/7 markets. So we can't do what Hyperliquid does because we're not an order book where price discovery is happening, right? Market makers are not hedging 24/7 on Avantis. It's a purely taker-driven product where anyone who wants to long short gold, crude oil, equities in the 24/5 markets can do that with reasonable size, very little, if any, slippage, and very limited bands of what they pay in fees in terms of funding or margin fees. So our goal is to replicate what a lot of these CFD brokers do, like Interactive Brokers or Moneta or LMAX, all of these traditional TradFi CFD brokers, become an on-chain CFD broker and make sure we offer obviously self-custody, good incentives, competitive spreads, transparent pricing, all of that.
Wow, I didn't know that. That's a very interesting fun fact about Avantis already there. So essentially you don't yet have the ambition of having 24/7 perps trading for these RWAs. And by the way, like you mentioned, crude oil, gold, I suppose Tesla, right, Nvidia, all these sort of publicly traded equities or commodities. But you follow the TradFi model in terms of market closing and opening prices.
Yes.
Yes. One thing you mentioned is like you're purely like a taker product, and yes. So how's that actually implemented? Do you have one of these smart contracts that actually has a business hour requirement, or yeah?
Yes, exactly. You have a smart contract that it listens to the socket, and then the socket tells the smart contract, hey, you should execute or not execute the trade. So people can't be doing funky business outside of market hours. We actually have maybe the market opens 30 seconds after global markets open because we're coordinating with Pith on pricing, and then people are just getting onto their desks and publishing the right price. So one small mistake can cost you millions, and so we make sure we follow global markets here. And the vision is to go from 9 to 4 markets, 9 a.m. to 4 p.m., 9:30 a.m. to 4 p.m. markets, to go from that to 24/5. That's the next step, which is on the roadmap within the next 2 months. And then from 24/5 to 24/7 markets. But the reality is no one trades on the weekends in the real world. People in the real world, not crypto degens, they want a break from trading. And there's a reason why there's limited liquidity on the weekends and people don't actually encourage trading on the weekends. So we're totally fine with Perps being 24/5, just like they are right now for gold, for example. Gold is a 24/5 market. It's only closed for 1 hour in the day for maintenance. That's it. Otherwise, it's quite literally a 24/5 market and limited weekend liquidity. And stocks are even way worse. So we're not super concerned about going after 24/7 when we've not even solved the core thing, which is why do you want to trade on chain versus trade on interactive brokers? First, answer that question, then go into the bigger experimental features is how we think of it.
Yeah, it's a good point because as crypto people, we think, 24/7, that's what everybody wants. But actually, the TradFi people, they're probably quite happy to take a break in the weekend. There's reasons for that. So 24/7 isn't maybe the big sought after sort of killer feature for them immediately. So what do you think now that you follow these sort of times, right? It's not 24/7. You follow closing times. What do you think is the edge of doing this on chain? What do you sort of what is your edge essentially?
Yes. So the way I think about it is that I have had horror stories, especially in countries like India, where the governments themselves are arbitrarily banning CFDs. So any sort of derivative for any sort of asset, generally equities, there's a lot of horror stories of people trying to go offshore using VPN and then getting scammed by these CFD platforms that'll say deposit and trade Tesla with 5x leverage. Scammed of all of their money. I've seen horror stories of that. So the first reason to trade on-chain is, do you trust self-custody? You don't want to put your money into a platform. And do you trust the platform itself, right? That's the number one reason to trade on-chain, that you have self-custody and people want to own the money that they want to trade with. That's the core premise of building on-chain. And the second is, of course, that we can do more fun stuff compared to TradFi brokers. So on Coinbase, Avantis allows 25x leverage. And I just posted about this. Someone made like 20 grand in an hour trading Coinbase on Avantis because of the leverage we offer and on a small event-driven earnings move. So JP Morgan said, base token will be valued at 35 billion, and Coinbase moved up 5%. The trader was like, it's taking home a big paycheck. So we can do more fun stuff in the sense that we can offer higher leverage. We also offer incentives. Obviously, most TradFi brokers will not share their equity with you. We will do that very proudly and gladly for trading on the platform. So higher leverage, self-custody are very big reasons, and not trusting anyone else with your money is obviously very, very important as well.
Yeah, that makes sense. So basically, this is not about the 24/7 nature of crypto as much as, hey, self-custody. I mean, even within crypto, we had FTX who were huge in perps, right? And we saw what happened there. So this is basically, hey, here you have smart contracts, you have your own keys that you bring to the application.
Yes.
Yeah. You mentioned earlier that you basically are. Yeah, I guess do you think mostly of yourself as a front-end application as well, like an app? Do you eventually want to have your own sort of wallet app or be integrated into Phantom, or do you also think of yourself as infrastructure for hedging? I think that's what you mentioned earlier. Is this is not necessarily used for hedging. It's more like a take-up product. But yeah, how do you think is your vision to be built like a sort of Robinhood style Perp stacks with an application for retail to trade on directly against Avantis, or is Avantis also going to be more like sort of background infrastructure that other market operators use?
Yeah, first of all, I'm very impressed by these questions. It seems like you're doing your research and you're deep into Perps as well. Is that true? Are you like a Perps user, or you trade Perps yourself?
I trade. I'm one of the retail apes that is trading Perps on Phantom. Actually,
Nice.
I know.
So
I know. Apparently,
that's amazing.
Everybody tells me I'm being wrecked on the fees, but I don't care because I like to pay for convenience. So that's sort of, I always knew about Perps. But yeah, it has to be mobile for me. But I did actually try. I levered up some Avantis token, levered long recently. So I'm long Avantis right now.
Good stuff, man. No, this is very validating to hear, because our big focus is both on the back end to provide and increase liquidity for these assets so that any front end can integrate us. An example of that is BankerBot on Twitter, where you can just put a prompt on Twitter and then it'll buy Bitcoin or SPY or anything of these assets for you. But our big focus is that we have the liquidity we need, we have the right pricing, we just need access to retail. And the best way to get that access in a convenient way is hide all of the crypto abstractions from retail, make a dead simple Phantom-like app, and publish it on a certain crypto app store that will be available to millions of people. And I'm talking about the base app, right? And as you may know, Luis, we are integrating Gelato to abstract away all the ETH, abstract away all the signs, all of that stuff, and make sure that we can present a Robinhood style simple perp trading app for all assets, all global assets, unlimited leverage on the base app. So you'll be the first ones to try it once it's out in about a month in beta. But just flagging that that's a big part of our push, that whether it's an order book, whether it's an AMM, retail does not care. Retail does not care as long as you're giving them the right price, the right fee structure, and a fun experience. They're paying you for dopamine, not just, access to an asset. So that is a big part of our vision. At the same time, we're talking to order book DEXs. So some well-known names that I cannot talk about right now or disclose, but very top-ranked order book perp DEXs that have launched these markets, but they know how hard it is to hedge them, especially because they're very illiquid, right? The order book is not very liquid in the beginning. So we are a cheaper venue than some of the top names right now to hedge, and they might open a hedge on Avantis because it's an AMM. So AMMs are helping bootstrap order books, which is a first, I guess.
That's really interesting. Yeah, and then to unpack the first part, of course, yeah, we at Gelato, we're working with you guys to basically have best UX trading, gasless trading. It's using Gelato's relay system, Gelato's paymaster and bundler system in the background. And
Yes.
you also mentioned Base app. Like all of this is going to be launched in the Base app as well, like the Avantis interface. Essentially, I think that's going to be a key unlock.
Yes.
And you mentioned how important Base is as in your strategy as a distribution partner, right? So I think that was a smart move as well. Yeah, I actually like. Yeah, what are your expectations for this sort of Base mini app store? I myself, I have used the Base app. I've also used Phantom. Yeah, do you already have like good perps trading in the Base app there today, or is this Avantis launch gonna be the first big one? What you say in the Base app?
Yeah, I think anyone can launch on the Base app. So it's a permissionless app store, really. If you think about it, where the best apps will climb to the top, and some of the apps will get the right showcase from the Base team, right? So it's not like we'll be the only ones for sure. And that's a good thing. People have a lot of optionality, but we'll be the ones where we'll focus a lot on the UI UX in a way that hopefully Base will want to promote us, right? So we will get the requisite distribution based on that. So we're working very closely with the team on making sure that we're building something that they actually admire and something that they want to push. And of course, there's no guarantee that they will, but we're very confident of that.
Yeah, that makes sense. It's a bit of a different approach than in Phantom, where they sort of verticalize the perps trading experience in app.
Yes.
Which, to be honest,
Yes.
as a user, I really enjoy. But
Yes.
here in the Base app, it's going to be more like, okay, it's like an app store. You open Avantis,
Yes.
and then you basically tailor like your own experience, right? So I will definitely notice a difference going between Avantis
You will.
and another perp DEX. Yeah.
Yeah, you will. I think there'll be maybe one or two more steps to get to Avantis on the Base app versus Phantom. It's like on the mini nav bar. You click on Perps, you're right there. So it won't be as seamless just yet, but hopefully we can work something on that front as well.
Yep. Cool. Nice. And then, yeah, let's talk about what you also mentioned, that AMMs are like Avantis now, which is an AMM based perps model, is being used or will be used by other perp DEXs as a venue to hedge, like you mentioned HIP3 in the beginning, hyperliquids, permissionless markets, where you now have, I think, this NASDAQ 100 thing, or XYZ 100. So one question is like, how do the worlds of your perp DEX interoperate with one that is offering similar assets, like let's say a Tesla perp, but on a 24/7 basis? Like how like when with Avantis, when the weekend hits, is there like a sort of like a closing price and the price of the perp stays flat until Monday or opening? Yeah, how does that sort of work? Interoperate with a perp that is maybe trading 24/7, or do you? Yeah, I'm sure there's teams already attempting 24/7 today. What do you think of these attempts? Do you think they're a bit too risky? How would you do it if you did that yourself for Avantis, and how can they benefit from Avantis as a venue to hedge on?
Yeah. So the way that they can potentially interoperate is that these audible perp DEX market makers can hedge on Avantis, given it's cheaper, much more cheaper to hedge on Avantis, and then make on the platform as well. That's one option. We can also hedge our book on these other perp DEXs based on the costs, although right now they're very, very expensive and volatile. But again, very early days order book, so it's hard to say. That's one simple way to interoperate. To answer your question, does the market close on the weekend? Yes, it does on a Friday. It opens on a Monday, and there's a gap that'll appear in the opening wick. So Tesla closed at 600, it might open at 610. So that $10 of price action is like missed by the trader who cannot long from 600 to 610. He'll have to be long the previous day to get that $10 benefit. That's how it works.
All right, cool, nice. Does that mean you can also be liquidated on like an opening wick quite quickly? Do you see that happen a lot?
You can, but people don't go that crazy. People understand that, on gaps, the P&L moves are amplified. And we show that in the UI as well. We remind people that, hey, you're opening a large size, large leverage position, but then there's a gap risk. Are you sure you want to do it? Because there's P&L amplification. So then people learn more, they can understand. So we don't see that too much. And the sad part is, Louise, that it's DeFi, right? It's completely permissionless, no KYC. And so people will try to attack you more often than not. So our competitors have gotten attacked badly and drained. So Ostium, if you look at their vault buffer, which is like an insurance fund for the vault, which takes a hit before the LPs do, and it's down 8%. So if all the trades close on the platform today, Ostium LPs walk away with like an 8% hit to their principal, which it's supposed to be USDC stablecoin farm, if you think about it, right? So the tricky part about Perp DEX and RWA pricing is that any gaps in pricing, any gaps get amplified by leverage, both good and bad, right? So bad actors are plenty in DeFi, plenty of bad actors who do this for a living. Every day, all they're doing is looking at feed mispricing and optimizing across platforms and then wreaking havoc on the protocol economics of each of these platforms. So we've built up robust monitoring to catch them and fight them all the time. But the reality is that we have to be a little more conservative in, kind of the market hours when we open the market, and also the leverage we offer and all those types of things. So every Perp DEX knows that. That's why things are so slow in this space. Crypto is like, let's go quickly, right? Because it's continuous markets.
Yeah. No, it's Perp DEXs are probably the ultimate PvP environment to operate in right now. So
yes, very, very, yeah.
Yeah, I'm happy that you're still alive and kicking. You seem energized, so hang in there.
Yeah, we are kicking, man. Like, so after TG, we're really happy to see this. But after TG, platform metrics are up like 5x across the board. PVL is up, DAU is up. We're getting a lot of support from base. We have a vibrant community that recognizes us for what we built and then uses us for what we built. Like, whenever people ask me, so how do you compete against Hyperliquid? I say I don't. Like, AMMs are a beautiful primitive. They're not a crutch. We build stuff that order books cannot build, and we'll continue doubling down on that. So we talked a lot about RWAs, but the bread and butter of Avantis today is actually a product called ZFP, Zero Fee Perp, where you go, it's a very degen product. Luis, you go up to 500x leverage, long, short, and you pay 0 fees on opening, 0 margin fees, 0 holding fees. You only pay from your profits. And that's one of the most popular Avantis products that order books simply cannot offer. The market makers will not hedge a trade that's more than 40x leverage. They just won't do it. They won't touch the trade. But our LPs will hedge it, get exposure to it, and walk away more profitable than they were yesterday. So there's things that we can hone in on as an AMM that order books simply cannot offer, and we own that. And that's our niche. And it's a large niche that is still like 100x growth potential. So that's what kind of excites us and keeps us very energized.
Yeah. So let's double click on this sort of dichotomy of AMMs versus order books. I think some of the early Perp DEX warriors like GMX, they sort of pioneered this AMM model. And then recently you had a big focus on clubs and like order book Perp DEXs like Hyperliquid. And actually you're saying that they can coexist, right? And that AMM has a sort of niche. So it sounds like the niche is basically like one big differentiator. It sounds like as AMM Perp DEXs can more easily bootstrap like high leverage, like 50x, 100x, 200x products.
Yes.
Because there's like an LP pool on the other side that is willing to take some direction for some moment. So can you sort of is that let's double click on that. Like what do you like the most about your AMM model, and what like in the future would you also release an order book, or would you always stick to AMMs? Is there like some hybrid model where some assets are traded on an order book, some assets are, or some leverages are on the AMM? Yeah, how do you think about that design space?
Yes. So I'll answer both questions sequentially. So the first is, what do you like about the AMM, specifically Avantis? We like the fact that the AMM is always a taker of last resort, and hence the pricing is always competitive. And so even when our TVL decreases, so right now with 5x TVL, we're gone past 100 million. We hope to keep growing, but even if it reduces somehow, given market conditions, given yields reducing, the remaining liquidity is still the best liquidity to trade against for any of the perp DEX at that comparable level of TVL. So a person trading Bitcoin taking a $3 million size will still get zero slippage on Avantis, even if the TVL goes down to 10 million. And you'd still get zero slippage even if the TVL is up to 100 million. Because Bitcoin is such a liquid asset that you should be offering that unless you're going to like $1 billion TVL, at which point it can become toxic flow. So love the fact that AMMs are a taker of last resort. They're always backstopping liquidity, assuming that you're doing a good job at risk management. So again, our competitors have gotten blown out completely by toxic flow because they simply don't monitor toxic flow. And if you're not monitoring toxic flow in DeFi, you're flying blind into the darkness, hoping that you'll come out into the light. That doesn't happen. And that in DeFi especially, that cannot happen. So as long as you have proper risk management measures, you as the house are pricing things correctly, you're working with market makers to hedge those LPs for the most part, I think then you can grow TVL sustainably and slowly and sustainably, but surely. Then there's a path to growing that. Now, the second thing is launching new products. We can launch some cool products. So ZFP is what we launched in April, Zero Fee Perps. Within 6 months, it's done 25 billion in volumes. That's about 60% of our volumes. So in those 6 months, we've done 60% of our volumes that we've done in 1.5 years, pretty much, which shows like how much excitement there is around that product. And again, high leverage AMMs are king. All books cannot offer it because they are the LPs of last resort. And the fun part is that retail on average loses money on high leverage. And retail knows that. So the retail is the best LP for retail in that sense, right? Market makers are overcomplicating things and thinking of risk in a very big way. But if you have genuine retail flow, then you can easily provide naked liquidity for it, unhedged liquidity. Even though we do hedge, by the way, we consistently hedge, which reflects in our metrics as well, right? And now the second question is, where are we going? Avantis is moving towards a hybrid model where we'll have an AMM to bootstrap these new markets, test out our thesis. Do takers even want this? Why are we working with market makers and banging our head against the wall when the takers not even ask for a product, right? So let's have an AMM bootstrap a market. Let's have an order book scale that market in a capital efficient way. And so the next version of Avantis will be a hybrid version with RFQs, with an order book, with an AMM, depending on the type of product we offer, because we'll be offering more than just perps. We'll be going into structured products and options as well.
Cool, nice. Lots of alpha in there. So talking about markets, creation of markets, that has always been an interesting point, right? I mean, hyperliquids, HIP3 sort of was the big meme for permissionless markets. How do you approach the creation of markets? I suppose right now you're creating them still. Are you gonna open that up? Like you mentioned, this AMM model, unhedged even might be a good enough product for retail and retail LPs, and that might be sort of a silver bullet for permissionless market creation. But yeah, how do you think about that? How do you think about HIP3? Yeah, do you aspire to open up the market creation on Avantis as well, or do you think that's not needed? You can as an organization you can sort of create all the markets that you want to create.
Yeah, we don't think it's needed because at the end of the day, there's only so many markets you can open up. Number one, that are requested by our community, and number two, it's still a very risk intensive process to be able to monitor what those markets are doing and how people are trading those markets at an infrastructure level. So we'll retain control of that because it's from a security perspective, it could make or break the protocol. So we want to retain the security control on that. Regarding HIP3, I think there's no comparison on Hyperliquid as an ecosystem. Every dev tooling and update they roll out is designed to make Hyperliquid more composable, right? For us, we're doing something similar in our SDK via builder codes. So people can plug into the liquidity and launch their own markets, but it's not the same as Hyperliquid. Have a whole primitive for bootstrapping new order books and where other market may take the risk of those order books. So HIP3 really, really cool. And again, it's an extension of what Hyperliquid stands for, right? Like open, permissionless blockchain for all of finance. And so really, really cool. And it's great to see, in my view, I'm seeing all this timeline FUD on Ostium and Hyperliquid last 2 days, but it's a net positive thing that more perp DEXs are actually launching RWA markets in whatever way they deem fit. I think it's net beneficial for all of on-chain finance.
Yeah, good take. So yeah, you mentioned. I mean, let's double click a bit more on RWA markets. Do you mentioned that 24/7 is not currently your focus, but how would you how do you see the future of equity futures evolving? Right, like, do you think more and more will come on chain? What about spot trading? Like, so what are sort of the trends that you're observing? And at what point do you think you would take the leap and offer 24/7 markets on Tesla, for example, Perps? At what point do you think the time would be right? And
Yeah, when we start seeing people tell that to us that, hey, why aren't you offering 24/7 markets? I really want to trade Tesla on the weekend. We'll think of launching it. But right now, we have bigger problems. Right now, the bigger problem is, how do you hedge these single name equities? How do you offer competitive pricing on them? How do you offer competitive liquidity on them? Where are the takers of these products? Retail is the ultimate taker, who's trading in like smaller sizes with higher leverage. Any big name like JP Morgan or any big hedge fund is plugging directly into Interactive Brokers or any other like big venue which is regulated, because they have regulations to follow, right? They cannot simply plug into an HL or an Avantis off the get-go, right? So our bigger thing is, how do you find that flow? How do you cater to that flow? How do you make sure that that flow stays? And then listen to that flow. What are they saying? Are they saying they want 24/7 markets? If they're not saying it, why are you taking the risk? It's unnecessary risk for the protocol.
Yeah, no, that's a good approach. And so you mentioned hedging. I suppose the way your LP pool is hedged is that sometimes arbitrageurs come in, they sort of put it back into balance, right? Market makers come in and they put it back into balance.
Yes.
So I suppose these market makers, then they need to be hedged sometimes on a venue like Nasdaq, I suppose, right? If they want to go long Tesla spot, then they need to a long Tesla spot, right? So like, can you give us some insight into, like, are these RWA perp DEXs like Avantis, are they already spanning? Are the operators or the participants in this market already spanning the boundary between on-chain crypto and off-chain TradFi exchanges like Nasdaq and CME?
Yes, they are. And surprisingly, more and more so, they want to plug in more because they see this as a space that's going to grow. And they want to be the first market maker to integrate the new perp DEX that offers RWAs. So for us, we've been working publicly with KeyRock for 2 years. They've been a great partner. Highly recommend any perp DEX to talk to them because they're very flexible. They are able to offer hedging on gold, dollar yen. Dollar yen is one of our most popular pairs on the RWA side, Luis. People love trading like 400x, 1000x dollar yen moves. So very popular and very volatile forex pair, the top 3 forex pair in the world. So people like folks like KeyRock can offer hedging on these RWAs, but equities is something they still don't touch, right? So much easier to get access to FX and metals and commodities, much harder to get access to equities. So even within RWAs, it's not like you can trade all of them. It's all level playing field. A lot more liquidity for FX. Currencies are so liquid compared to like a single name equity. Even though Apple is like trillions of dollars, the derivative market for that is very liquid relative to the derivative market for dollar yen, for example.
Yeah. Okay, cool. So you already have decent infrastructure for like commodities offered by market makers like KeyRock, whom you work with for hedging.
Yes.
But I suppose equities hedging is harder because because of various restrictions there. So let's finish up on the whole AMM design discussion a bit, but it seems like the key aspect for Avantis is this LP pool, which is sometimes willing to, go like directional a bit more, to always offer leverage at any time. and then it sort of relies on for the LPs to not have too much impermanent loss, or all the typical problems that from AMMs. It relies on hedging, being hedged, and I suppose fees and maybe token incentives. Like what is the sort of thing that is needed to put this LP into balance? Is it basically arbitrageurs coming in, and is that the hard part for you to create, like to essentially have liquidity in all of these markets? Is always you need sufficient market makers to be there to always rebalance the LP pool, because of course the LP pool itself cannot open a position on CME or even another chain, right? Like that you cannot do from the LP pool. So
so there's two parts to this, Luis. One is that we work with market makers on an SLA basis, so they have to close this queue within a certain time interval. Otherwise, there's penalties to their token rewards, right? That's one. That makes sure that there's a maker of last resort in the platform. The other is that natural arbitrageurs can come in and arbitrage what we call loss rebates on the platform. But to scale this, we need to make the arbitrage system very dynamic and permissionless. Right now, it's a bit more permissioned and not as dynamic. So that's the challenge for V2, that we introduce dynamic funding rates that quickly adapt to the markets and make sure arbitrage opportunities are really insane, while balancing what takers are being charged. So you can have a funding rate mechanism, for example, on an AMM, not a problem. GMX have that too. But as soon as it's an illiquid market, no taker will come in and take a trade where they have to pay 1,000%, even if it's for 5 minutes. The taker doesn't know it's for 5 minutes. The taker will see 1,000%. They'll be like, oh my God, why would I do this? They don't know that a market maker will balance it immediately and get the skew down, and then you're paying 10% again, right? So we have to carefully balance taker interests with maker availability, which is a delicate balance. Then make sure that we launch a more permissionless arbitrage mechanism in V2. And then what we can do is we can actually use markets like Hyperliquid. That's why I'm so excited about a permissionless HIP3 model, where our own market making bots, the ones that we have developed as a team internally, can close this queue on Avantis and then open the subsequent opposing trade on Hyperliquid. And then we make that vault public. We call that a public market making vault that gets you XP fee yields, and it's completely delta hedged all the time. And it's a maker of last resort. And then we have our own version of HLP, which is just a market maker. It's not a counterparty, it's a market maker. And it works alongside the Avantis, current Avantis LP vault, the ABUSTC vault, to make sure the ABUSTC vault is completely hedged. So a lot of things we can do to scale liquidity, but I think the core thing is making sure that the arbitrage itself is very organic and very scalable.
Gotcha. Yeah. So right now the LPs are like sort of crucial to make Avantis work, right? I suppose that this is currently like, how do you recruit LPs right now? I suppose this is bootstrapped with token incentives and so on, because right now it isn't perfectly hedged and so on, right? So there's probably a lot of risks when joining the LP pool, but there's I guess a nice APY with Avantis tokens as well, or how do you make sure that liquidity is being provided, or do you just work with sort of a permission set of LPs to provide in that pool?
Yeah. So we don't have any permission set of LPs. We don't make LP deals or something like that. We just have our APR, and we have our stats on the pool Sharpie ratio and all of that stuff. And then people can join based on if they feel like this is a well risk managed pool. And that's how we kind of think about LPs joining. So all of our marketing has been DeFi Llama or our Twitter posts or like Earnbase, any of these front-end aggregators that show yield. That's been our marketing. And the proof is in the pudding. So our LPs have not taken a share price hit, touchwood, since 2024 of August. So more than a year of increased share price growth, sustained growth in share prices, no drawdowns whatsoever. So that's one thing. The second is that we've tied the token into the staking mechanism. So we have a proof of stake mechanism for the token, where the token stakers can be slashed if the vault buffer goes down by a lot. So if there's a fall by 5% in the vault buffer, which means a potential share price hit of 5%, then stakers Avantis can be slashed and given to LPs as a thank you for taking that risk at that time. And stakers obviously get benefits like reduced fees, more Avantis emissions, etc. for the role that they play in securing the LP mechanism, even though it's not been utilized so far, and we highly doubt it will be. But it's a it's a last resort, right? It's a expensive last resort. And then finally, I would say that the protocol economics itself adjust when things get risky. So when utilization on an asset increases a lot more than the LPs should be able to handle, they get compensated for it handsomely. So if you're trading a skewed market with size and there's no market maker that's coming in for a long time period, you'll end up paying more than 100% annualized margin fees. And all of that goes to 100% of the fees go to LPs. None go to us. Only liquidation fees go to us.
All right, cool, nice. So you have a bunch of knobs to calibrate to make sure
Yes.
LPs get compensated. But would you say like our LPs, like they are basically the essence to Avantis, right? Right now, like you scale the markets by having more essentially TVL in the LPs, right?
Yes, we do. Exactly. We scale the markets either by having more TVL in the LP pool, or if we're super confident that we can hedge that market, no matter the size, then we can easily increase the market size arbitrarily, even though there's not enough TVL in the system. So around 3 weeks ago, our OI reached 70 mil on a TVL base of 25 mil. So that's a 2.5x above TVL. How does that happen? Because we're super confident that we can hedge those markets via a combination of market makers, internal market making bots, etc. So it's all about value at risk. It's not as much about how much TVL there is in the system. So which makes us very capital efficient, right? As long as we have good hedging mechanisms, we can scale capacity on the OI side to like $500 million on $100 million vault.
Gotcha. Yeah. Cool. So yeah. So next up, let's talk about one project, Venturals. I saw them. They wanna offer pre-IPO perps on like SpaceX and OpenAI and so on. I think they were quite talked about for a bit there. Of course, this is like on the extreme end of okay, you don't really have a good reference price. So yeah, what's your take on projects like this? Are they too far out on the risk curve? Yeah.
I'm not sure if they're too far out on the risk curve. I'm sure they're appropriately pricing those shares and stuff like that, and the spreads and stuff are insane. I think they're too far early into the adoption curve for this type of stuff. Like, I don't want to buy OpenAI shares on the secondary market with leverage for sure. I might want to buy them spot, and if I buy them spot in size, there's a bunch of OTC dealers. Like, people don't want price to be discovered as much also for secondary. It's very private. Like employees want to sell their shares, insiders want to sell their shares. Doesn't do super well on the public markets, right? So Ventures is a bit early, I feel. I could be proven wrong. But if I'm seeing barely any adoption in the grand scheme of things for on-chain RWA perps, then on-chain secondary market spot and perps is even more illiquid and early.
Yeah, let's talk about on-chain spot markets, right? Like that's another big hairy goal. There's a bunch of good projects that are trying to conquer the on-chain equity spot markets. Like you had X stocks. I don't think they've seen that much adoption, but there was like a thing. It's still a thing. You have superstate tokenizing securities. What's your prediction on-chain equities trading for existing equities that are already listed, or maybe for wholly new equities? Like I could see a bunch of crypto companies sort of IPOing on chain. So what's your own sort of take on this, bullish or bearish? I can already, based on what you said, sort of somewhat predict that you will say it depends on the demand for this, and probably a lot of the demand is on TradFi retail brokers that can't move on chain yet. But yeah, like what's your prediction for on-chain equity spot markets, and how much of a factor is that in your perp design? Like if you had a very liquid on-chain equity spot market, would that make your life a ton simpler in a way?
So it doesn't affect us if there's an active spot market in equities. It doesn't affect us in terms of hedging, because if someone takes a 10x long on Tesla on Avantis with like 100K of capital, we don't have $1 million to put on the spot markets just to hedge that $100,000 collateral trade, we might just run it naked, or might have a market maker hedge that on a equivalent Perp DEX or like a CFD platform. So it doesn't affect our lives, our day-to-day doesn't matter. I will say that people definitely want on-chain equity trading to some extent, but the problem is that, there's no FDIC insurance, which is a big part of what is important for equities trading. So when you trade equities in the US, which is where most of the volumes for equities comes from, and also because US is the biggest equities market in the world, all these brokers have FDIC insurance, and also, dividends is easy to pass through for taxation reasons. So I think having insurance for your brokers, having dividends, and being able to capitalize on those, being able to participate in like stock lending programs, I think that's why people use Robinhood and IBKR. And so I in fact feel like tokenization is bullish, but distribution is more bullish. So I'm more bullish on Robinhood chain and them launching tokenized spot trading, because then I know that the Apple stock that I bought is not only FDIC insured, but also I can lend that Apple stock for 10% a year returns to someone who wants to margin trade my Apple stock or margin short it. So I'm more bullish on an ecosystem play which is centralized using blockchain tech than on-chain DEXs launching spot trading, because that clearly hasn't worked out super well. If you look at X stocks or BackFi, like the volumes are still pretty low for the time that they've been live, right? So that's my take. A hybrid approach with good distribution and some regulation where customers are assured of their funds being safe, that is more bullish than a completely decentralized approach, especially for equities. For crypto, it's fine, but for equities, it's not fine.
Gotcha. Some really good takes, I gotta say here. It resonates a lot with me. You mentioned one pattern that we've seen emerge is, for example, Coinbase's BTC-backed loans powered by Morpho, right, on chain. So one theme that we have going for us with EVM blockchains or blockchains in general, smart contract blockchains, is composability, right? So do you think the unlock there for equities to be more on chain could be better securities lending rates, like collateralizing them on chain, looping them like we always do with right? Like is that sort of the driver that could move more equities trading on chain, because you like somehow lending like as a platform on chain is so much better here?
Yes, it is better. And it's not like it's not being tried. So Camino actually uses BackFi underneath, I believe, to tokenize Tesla, Nvidia, etc. They've not seen good TDL from that. Maybe if a last I checked was 10 million or 20 million in TDL, but it's not nothing. It's a good start. And again, as I said, if you saw the same interface and all you saw is, no one says lending and stuff, all you saw is like, give your Apple stock to us for 10% return a year, 5%. And Robinhood is saying that to you. And the Apple stock is secure. Why won't you not do it? So it's definitely, from that perspective, Luis, it's definitely going to come on chain, because more and more trad brokers will want to use blockchain tech for permissionless lending while being sort of in the regulated space. And so I believe it's going to increase. I just don't think it's going to increase from the names that you might be seeing today.
Gotcha. On that topic, there is now a bit of a belief around hyper perpification, I guess, similar to hyper tokenization. Like basically everything will be perps. Do you subscribe to perps sort of eating everything? What I mean with this is, like, for example, a lot of the demand on Aave and so on has come from people seeking leverage on spot, right? Do you think perps will eat all of that market, somewhat diminishing one of the major use cases of on-chain lending in the past 4 to 5 years, like margin, essentially like spot leverage, right? Or do you think as them very different in terms of as a product? And
yeah, we don't see it differently because we are building margin trading more than we are building perp trading. Like on Avantis, there's no funding rates. It is effectively a perp because you could hold the position till infinity until the margin fees eats into your entire profits, assuming the price keeps going up more than the margin fees goes up, right? So we are technically building margin trading and not perp trading. Both are very similar products. At the end of the day, we are so obsessed with names, but it's leverage It's leverage for retail. It's like easy leverage as a slider, and you're getting some amplified price moves from that. The only difference between margin trading and perp trading is the availability of arbitrage. That's it. And so, by the way, margin trading is huge. Like margin trading for CFDs for FX is massive. It's like a much bigger business than perp trading in crypto, much bigger. Because that's why people are making so much money on like FX brokerages and stuff like that. Oanda is so big. IBKR is so big. CFDs for retail shares also exist. Equities also exist. So we're just trying to replicate that. But Perps is a slightly different instrument of doing that. So I'm bullish on both approaches. Again, I'm all about like distribution. I think we've practically solved for the tech.
Cool. Wow. That's an unlock. Yeah, I was thinking about that earlier, whether you are strictly speaking a perp because you have these sort of closing times and so on, right? So that was a key unlock. So you are, you're not like a pure perp, like a BTC perp is on hyperliquid. You're somewhere in between margin and perp.
Yes.
And what are the key differentiators there? You mentioned the funding rate. For example, does ADL, right? Like, let's talk a bit about 1010, the big event. I got liquidated really badly back then.
Yeah.
Rest in peace, my position. But like for example, ADL, does that translate to your model and margin leverage, like spot or like what are sort of the key things that we know about in perps that don't exist in your model and vice versa?
Yeah. So ADL does not apply to us. We don't have to manually change the leverage on any position for any reason. We offer guaranteed stop losses. So if you did in fact set a stop loss, there's no chance you would be liquidated on a crypto market because we guarantee that on a smart contract level. If Pitt said the price was X and the wick went down to 80% below X, you'd still get X. No worries at all. So that's why we didn't make most of our money on the 10-10 day from liquidations. We made most of our money from win fees, which is our like people who were in profits paid a portion of their profits to us as a win fee. And so ADL does not apply to AMMs unless they have some other funky mechanism going on. But I guess that's in a way an advantage. Market makers, as I said, they want to reduce risk when there's scam wicks happening, right? They are actually quoting you a price. They're holding inventory of the asset that you're in question, right? But AMMs can borrow the price and give it to you. So it's good and bad. It's bad because there's no price discovery. It's good because why discover price of liquid assets? We'll give you the guaranteed price that you asked for. And so no ADL in Avantis is the summary.
All right. And no funding rate, you mentioned that as well as a differentiator to like pure perps. Can you quickly just describe like why not basically? Why do perps need it? Why do you not need it?
So to be clear, we can have a funding rate, right? It's just that we cannot only have a funding rate. So what I mean by that is our LPs are lending you this capital. They are lenders, right? They're lending you actual capital and the upside on that capital. So they need to get paid something, and that something is called a margin fee, a borrow fee. And we can have a funding rate on top of that. And then all that the trader will see is long net rate, short net rate. The net rate is the borrow fee that you're paying, plus or minus the funding rate, depending on the direction. So you might get net paid as a trader, but the payment will not come just from the trader. You might have to get something from the opposing trader and then pay something to the LP. So it's a very minor difference. But again, if you look at it as a trader, you will just see a net rate that you have to pay or a net rate that you'll receive for going long short. So perps and margin for crypto are fairly similar. Perps and margin for RWAs are very different because again, hyperliquid is purely 24/7. They will keep going on and the funding rate will be really volatile in the off-market hours. We'll just stop trading because there's no price discovery mechanism.
Gotcha. But on Avantis, it's still true that it's zero sum at the end of the day. There's an equal amount of losing capital to winning capital at all times, or is that somehow different as well?
There is, unless you're liquidated. So liquidations are like forced closes, and there's that is like obviously an event where the losing amount is greater than the winning amount potentially because the winners are closing their trades early, the losers are losing all of their collateral, including the liquidation buffer fee. So yeah.
Gotcha.
Yeah.
All right. Yeah. So what other things are you interested in? I think you as Avantis are already brilliantly positioned in the perps market, which is like a mega trend, right? Like some people say, okay, what are the big things coming out of crypto? It's like, okay, perps, prediction markets, stable coins, right? Like those are the current sort of mega trends. Yeah. What do you think about when you don't think about perps? I've heard, for example, that people have, want to have leverage on prediction markets that doesn't really exist today. It seems quite complex. Have you considered that? Yeah.
We have considered perps for like election prediction markets, or even short-term perps for, well, they won't be called perps. It'll be like just like leverage sports betting, for example. So you're betting on like a Raptors versus Nets game, and there's 4 quarters, and you're betting like within each quarter with leverage. So that's the type of stuff we considered, but it's really small. The market size to us is really small because the underlying markets are also not mature at the moment. The underlying markets have a size of like $50 million OI, or like $10 million OI, or 5 million. Offering leverage on that is like a tax wish, both to the person taking it and to the person providing it. It's like a negative sum game in some cases. So either you'll get exploited or you'll just misprice the asset and people will lose. So prediction markets are cool. Spot is cooler than leverage. And even predictions are cool because they're valued so highly and they're in the news all the time. But the revenues are super small if you compare them to perps. So fundamentally speaking, Polymarket at a $10 billion valuation, it's obviously a really cool platform. But it's not because of the revenue they make. It's because of the fact that they're changing data accuracy in the age of AI, right? It's not that, oh, they make hundreds of millions of dollars of revenue and the data API access is worth so much, they're the next Bloomberg. It's not like that. It's just that they are providing accuracy in the age of AI in the dark ages, and hence it's a great hedge to have an investment be worth that much. That's how I see it. So really cool prediction markets in terms of just mind share. I'm following it closely, and I also trade on prediction markets. But other sectors I'm looking at is just like yield tokenization. So that's something that we'll be doing for Avantis as well. The AV-USDC vault, if you're bullish on the yields increasing on perps, you can buy a derivative of that with leverage using Pendle. So we're working with Pendle on a partnership there for the AV-USDC vault. Anything that can increase yields is what I'm looking at. So anything that can provide more yields to our LPs, or anything that can provide more alpha to our traders, and I am locked in on those things.
Cool, nice. Yeah, great takes again. Actually, yeah, with Polymarket, that's a good point about having sort of truth finding in the age of AI. And also, I think there's a bit of like they just have so much attention with the US election, and they're almost a bit like a media company and so on, right? Like a new media company. So
yeah. Absolutely.
Yeah. Actually, anything with yield. So what do you think, like are you guys already working with Ethena? Like what do you think about yield bearing collateral in Perps? What do you think is coming there in terms of features? Or there's projects working on Bitcoin yield. Do you already allow I guess like at some point, do you maybe have like a weird version of Avantis where you can have a yield-bearing Tesla as collateral to go long even more Tesla, right? Like is that sort of at the far corners there, or
Yeah, so the answer is Avantis P2, right? We're working with all of these providers you mentioned. We want to have a native Avantis stablecoin that's yield-bearing across all of the collateral, across margin, across equities and crypto and stuff. So all for future. I think right now the focus is entirely on how do you grow retail distribution via a slick app? How do you grow liquidity on these names? How do you hedge these names? Everything else is like smaller additions that we can think of in V2.
Cool, nice. And in terms of the UX, how much do you like? I guess you build inside of the base platform, so you benefit from on-ramping and all of that stuff. How much do you leave up to Coinbase to figure out for your users in terms of like, how, like, I guess it depends a little bit on where user base is. Like, do you have a market sort of that you're going for? Like, is it, versus how much of, product integrations do you take care of yourself? Like, do you take care of on-ramping methods, local payment methods, credit card payments, like to onboard users, or do you sort of delegate all of that to Base and Base app?
So we're doing two approaches here. One is for the Base app. One is for the Avantis main app, the one that you've used and experienced. So we're launching a PWA and eventually an iOS app for the Avantis main app. For that, we are completely migrating our stack to Privy, Fun XYZ, and Gelato. And so we'll be using obviously Privy for wallets and social wallets and stuff, Gelato for Reliers and Gasmaster, and then Fun XYZ for checkout. And so that will be a purely like, okay, you can use credit cards, you can use exchanges, you can use a regular crypto to crypto transfer alongside all the abstractions. For the Base app, we are letting Base figure it out. That, hey, you will go in each country, you'll have your own local on-ramp method. You'll have your own tie-up with the local Coinbase exchange integrations that you'll have. So in the US, for example, Coinbase is obviously the biggest exchange in the US. You can get USDC from Coinbase to the Base app within like 5 seconds, no cost. So of course, I wouldn't want to enforce a Fun XYZ checkout there, right? So we let Base figure out the Base app stuff. We'll figure out the main app stuff. And hopefully together, it's the same underlying liquidity stack. So hopefully together, it enhances our metrics.
Cool. Thanks. A lot of insights for builders here. Last but not least, I got to pick your brain on options. You already mentioned that you also options are in the future of Avantis. Like what's your background with options? And a lot of times I hear, I don't know too much about options, but a lot of times I hear is basically for retail to seek out leverage. Options have, of course, done really well on Robinhood, right? I think they make up like 25% of their revenue or something annualized is from options trading. What's your take on options, and why are they needed in a world where you already have perps?
Yeah, I think they're not. Actually, that's the answer. And when I said we're working on options, I said that I actually meant that we're working on kind of structured products and layering in options, but then abstracting it away from retail. So one thing that we're thinking of launching is vaults for equities. So a long Tesla vault where the user can clearly see that if you hold the vault token for 7 days and the price of Tesla moves like, let's say 5%, 10%, or 20% either way, what's your payout? And so we're going to do structured options, structured vaults that are options underneath, but retail will never know because we want to simplify the whole process for them. And then the second thing we'll do that's more like an option. So when you said Robinhood, it's interesting you say that even within the options revenue, most of that comes from zero-day options. And so it's a miracle that the US blatantly allows zero-day options for retail, markets it as well, and they don't allow perpetuals because zero-day options obliterate retail. Every day. It's just transfer of wealth every day from retail to market makers. It's crazy, right? But that's allowed. Perps are not allowed. So our response to that is that we want to introduce zero-day perps. So it sounds funny because perps is a everyday like a limitless instrument, but a zero-day leverage or zero-day perp, all that is you offer linear leverage that closes at the end of the day. Simple. So you can offer as much as 500x leverage on Coinbase. Open it at the starting of the day. It closes automatically at the end of the day. Zero fees to open it. Zero premium to hold it. Zero margin fees. You only pay from your profits. So the ZFP model that we innovated on using crypto, apply that to equities, cap it to intraday moves. That's it. So retail's purely betting on intraday volatility. Zero fees upfront, pay from your profits. So that structured vaults, along with, of course, increasing liquidity on regular perp trading, up to 10x leverage. That's our focus for equities and then kind of abstracted options, as we call it.
Cool. Nice. Great stuff. So anything else that you want to talk about? Anything else that is currently in your mind?
No, I think overall, just wanted to say thanks for having me. We're pretty excited. Teams get tired after TGEs, but given the love we received, we're energized. So we're just putting all of that energy back into these cool ideas. And it's good to share them with folks like you who actually understand and value the questions. So yeah.
Yeah, I definitely have a preliminary understanding or a good understanding of perps, but you definitely have a trove of knowledge today that I was able to dig into a little bit. So thanks a lot for that. I wish we could go on for many more hours to go deep, because you seem very knowledgeable on that topic, and you surely are, with Avantis being one of the top perp DEXs. So congratulations. Thanks for coming on the podcast and sharing all your insights with us. Great to have you on.